Good morning, everybody. Hey, welcome to a rainy Thursday, June 4th. I hope you're staying dry this morning. I'm not so much. Got caught in a rainstorm out walking Charlie this morning already. So I hope you're staying dry as we get ready to start this Thursday and getting ready to head into the first weekend of June. Glad you joined us today. Looking forward to my conversation with Dave this morning as we talk about jobs and what that looks like and what that's going to be on the front there. So, hey, next time we will start to talk with Dave in just a moment.
Hello, Buenos Dias and V Gates. I'm glad you're here today. It's 8:40 now, 20 before 9. Let's see what Wall Street's doing to your retirement funds today, shall we? It was another dynamite day yesterday. All three major indexes were up big time. Let's see what's going on this morning. Downtown Sebring, we go to the offices of Statler Financial Services, where Phillip Statler is standing by. Bunch of data dumps. Some of it came out after we got done yesterday, Phillip, including vehicle sales. And that was kind of good news and a pleasant surprise, wasn't it?
Yeah, it really was, Dave. You know, the expected vehicle sales come in at like 11.2. It came in at 12.2. So I guess the deals that were out there and people getting their stimulus checks and people getting their tax refunds finally, that all helped the auto industry this past month. So some good things there. We'll have to see what they can do going forward.
See whether or not it can be maintained. The other item that came out, not such good news, durable goods, the stuff that businesses buy, and orders for those were a little on the off side, weren't they?
Yeah, they're just a little bit. I mean, it's basically, I would call it almost in line, Dave, because it was down 13 for factory orders, and they expected to be down 13.1. I think that 0.1% could be wavering either way. So they really came in line with what was expected for factory orders. Where we had a little surprise was in the ISM service index. Actually came in a little better than expected. Came in at 45.4, was expected at 44.7. So a kind of a pleasant surprise there after the manufacturing index the other day.
We were talking before we went on the air that looking at the numbers meeting or maybe being a tinge better than the economists expected each month on these things, we ain't going to get that V-shaped recovery we expected or hoped for at the beginning of this coronavirus mess, but a U-shaped recovery with a steep wall would be kind of nice going back up again, wouldn't it?
Well, it would, and especially if it's an economic increase, right? It says we see some of those numbers really start to gain some headway. That would be a promising sign that that maybe this recessionary period won't be near what we thought it was.
Absolutely. And the disconnect you and I have been talking about between the stock market and the reality of the economy is kind of interesting. If you accept the stock market as a legitimate leading economic index, okay, we're going to be doing fine, even if things are tanking right now. But it's irrational exuberance on the indexes. Kind of brings us up to the morning here, and we get the usual Thursday reports from the unemployment situation. First-time unemployment claims, and boy, have we gotten jaded. 1.88 million new unemployment claims last week. That almost sounds like a good number relative to what we've been seeing for the last couple of months, doesn't it?
Yeah, it really does, Dave. You know, you do get kind of bogged down in the current circumstances, right? And so the 1.88 looks exceedingly good compared to what we've seen the past month. But it really was depends on who you talk to, right? It's always that depending. So the folks that I really follow, it was kind of in line. They expected 1.82 and it was 1.87. I think that's pretty much in line. However, the guys at CNBC and some of those other guys, they expected first-time unemployment claims to be 1.78. So about 100,000 jobs different there. So, yeah, I guess it depends on how you look at it. Either one of those cases, it's not very far off the mark.
And it's inside the zip code anyway, so I kind of rack that up into the notion of things coming in, quote and unquote, as expected again, which The market seems to agree because I didn't see any great movement on the futures after these reports hit. Things pretty much stayed as they were, and when we get to the numbers themselves, it's kind of a profit-taking day.
Yeah, it definitely seems that way. They are pushing a little higher today. The losses are, and we'll have to see how that rides out after having three huge up days. It's you would expect some profit taking at this point.
Eventually, it's got to happen. Yeah, talking about profit-taking day, one of my headlines, and I was making this observation before we went on the air. Big headline on one of my tip sheets: the Standard & Poor's 500 just had its best 50 days ever. And they don't mention the fact that it was following about its worst 10 days ever right before that. I've always gotten a kick out of the sales-oriented pieces that come out. We call it a boom bull market when we go up from a big dip, and that's always hits me as kind of like the way we were measuring the longest bull market ever from the bottom of the Great Recession in March of 2009. Never mind the fact it took 5 years to get back to the zero mark, right?
Exactly. So, and that's the whole deal. It's all about sales. It's all about hype. It's that's what the media does, right? Hey, look, man, we've had the greatest days in ever. And so so basically they're saying you need to be here, right? You need to be. Fear of missing out is what they're driving at. And folks, don't get lulled into that fear of missing out. Sometimes it's not all it's cracked up to be.
Yeah, it's the same rule of thumb. Following hard news follows financial news. Always read things with a little bit of a grain of salt. The facts don't get lied about, but the way they get spun can sometimes get real intriguing, can't they?
Absolutely. You're so right there, man.
Absolutely. Setting the table before we get to the reports, I mentioned it was a big day up yesterday. Dow was up by 527 points. That was over 2%. NASDAQ was up by about 0.75%. And the Standard & Poor's, having its best 50 days ever, was up by over 1.33%. So, yeah, yesterday was an undebatably good day. Standard & Poor's is now, like less than 2% away from its all-time record close. So, the recovery back on the stock market, at the very least, has been that V shape we were hoping for.
Definitely. It has been a V-shaped recovery on the market front. You and I keep talking about maybe this one's not going to go back down, but who knows, right? We don't, all I know that folks can do, there's only one thing you can control in your portfolio, and that's the amount of risk that's there. You can't control what the markets are going to do and what they're not going to do, and nobody has a crystal ball for that. So all you can do is control the risk, and that's what's important at this point in time as this market has bounced back, is to make sure you're really looking at how much risk you have in your portfolio.
Absolutely. The advice you've been giving people probably parallels the advice that one of my annuity accounts did. I got a whole pile of notices as things were going down. They were switching over into more stable funds. Then at the bottom, they shifted over into some stuff that had a potential of growth. But my investments are a lot more conservative than they were a year ago, and I would imagine your clients are as well, right?
Absolutely. At this point, especially if you're in retirement, man, I mean, it's the point of not losing money is the best policy. And so that's the key right now, is to hold those losses to a minimum, as especially folks that are getting close to retirement. That's got to be vitally important.
Without a doubt. We are still getting reports coming in from quarterly earnings for the companies that get traded on Wall Street. This earnings season is getting staggered out all the way to the beginning of the next earnings season, isn't it?
Yeah, it seems to be getting pretty close. I'm sure towards the end of June, you and I will have 2 weeks where we'll have to be twiddling our thumbs trying to figure out what the heck we're going to talk about.
We always seem to find something, though.
That we do. We've gotten pretty good at that,
I think so. What do we got this morning for earnings?
So we do have a kind of a variety today, Dave. We start off the morning with JM Smuckers. Smuckers to me is kind of a staple, right? I mean, it's there. Got to have peanut butter and jelly. So that's Smuckers for you. They did well. They beat by almost 25, 30 cents a share. Revenue was ahead of forecast. They had a strong consumer demand because of the pandemic, but
I was going to
It's
say, there's
always the
another
but, right?
drop there looking at the futures. Yeah, what do you got?
So they did forecast a 1 to 2% decline in overall sales for their fiscal 2021 year.
Ooh.
Yeah. So I guess part of their business is a away from home meals, and their away from home business has seen significant weakness because of the pandemic. So they're trading down 4% this morning. That's a pretty big decline for them.
I was going to say they're toward the top of my big loser list. I didn't know that they were involved in those crackers and jelly and jam snack
I
packs.
didn't either, and maybe they just are a supplier to some of those people, because I've never seen them branded that way. But they could have a brand that you don't really tie back to Smuckers too.
Could be. As little as those things are and as much as they cost, I got to believe they're pretty high margins. So if their sales tank, that actually makes some sense, doesn't it?
Yeah, it does. So then we have a truck manufacturer, Navistar, makes those big semi trucks. They lost 38 cents a share, which was 3 cents better than expected from analysts. Revenue came in ahead of what Wall Street estimated, predicting that they'll have a gradual recovery for their business unit there. They're up 6%, kind of a big winner today.
Really?
Yeah, good day for them, huh?
But I suppose trucking being a necessity. I was surprised by that. I don't have it on my list, but a 6% bump would put them right toward the top of my winners list.
Yeah, so a good sign there. I got a couple other ones here. Let's talk about Michael's, right? We're talking about the art and craft retailer, which I find interesting because I saw that even through the pandemic, they were an essential retail establishment, which really baffled me. But it was, I guess, to keep people entertained. I'm not sure there, but they lost 43 cents a share compared to they were supposed to make 14 cents a share. So a pretty big swing there. Revenue was also down. Same store sales down 27%. They really did. The pandemic really hurt their results, but they're seeing some encouraging trends as some of their stores reopen this morning. But they've gotten beat up pretty bad. Now they're a cheap stock. They closed yesterday at $4.58, up 6. Today they're down 58 cents to $4, down 12.6%. So kind of a big decline for them.
Ouch. Those numbers would tend to indicate that maybe the Florida exemption they got wasn't nationwide during the stay at home, wouldn't you?
Exactly. Yep. And I'm finding that true as I talk to people across the country. I think we were pretty fortunate about what stayed open and what didn't compared to other states around the country.
I think so. Got time for one more.
All right. So let's look at, who do you want? Let's just talk about Fossil. Because they're kind of a high-end retailer, right? Luxury good watchmaker, belt maker. And they lost $1.51 a share. But their revenue exceeded expectations. And that $1.51 was really what was expected. So they didn't miss the mark when it comes to that. They did say that they will see continued pressure on their sales throughout this year. So they're trading down 5% this morning. Again, kind of like Michael's, they're a pretty low price stock. Right now they're at $3.61.
All righty. Looking at the futures this morning, yesterday, a big up day. We kind of alluded to it. A little profit taking is inevitable after the macro information came in, at least in the zip code of being expected. 45 minutes early. Phillip, what are we doing on the futures?
We are trading down this morning, Dave, in pretty good territory. I think the Dow's down 0.5%. S&P 500 is down 0.6. That's about $19. And then we've got the NASDAQ down about 0.3%, $28. So everything's going to open up to the downside. Switching to the commodity side of things, gold and silver both trading up. Silver going back over the $18 an ounce mark to 1809. That's up about 0.8%. Gold's up to $1,723 an ounce. That's up a little over 1%. Crude oil is really about where it was yesterday when you and I spoke, but it's down 1.6% from where it closed yesterday at $36.70 a barrel.
You know, when you see that happening where it goes up during the day and then back down for the morning, you got to start assuming you're looking at speculators there, and $36.50 is about where it wants to be, don't you?
It seems to be that way. I think it continues to be more discussion about what's happening in OPEC, and Russia's gotten into the conversation now. So, that's going to be the key thing there.
I think so. The overseas markets mixed across the world. Asian rim markets were mixed at the close this morning. Europe kind of taking our lead and doing a profit-taking day today. They're off by about 0.5% midway through their day. Phillip, advice always needed. We've alluded to it a couple of times during this report. Just because things are looking wild and crazy and good right now, nobody knows what's going on. That takes a risk control strategy. How do I find you to find that strategy?
You're right, Dave. They can give us a call at 863-382-0037 to schedule their financial x-ray to really look and see how much risk they do have in their current portfolio. Follow us online at our website, statlerfinancial.com, and then follow us on Facebook, man. It's a great place to get a lot of information. Statler Financial Services, search under that. We'll pop right up. And then check us out on our radio show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on Highlands News Talk, 7:30 a.m.
All righty, and back here one more time for the week tomorrow morning about the same time on Light. Phillip, thank you so much. You have a great day.
All right, buddy, you too, and I look forward to speaking to you as we close out the week tomorrow.
Do appreciate it. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Folks, remember, as we close out the show today, remember, we're here for you. If you have a 401k question, you have any kind of question at all about what's happening in the market, what's happening with your portfolio, hey, within this post, there is a link you can click to schedule a 15-minute call. Click on that link. Let's talk and see how we may be able to help you if we can at all. If not, hey, that's great. We want to be of service to our community. Give us a call. 863-382-0037. If not, click the link below and schedule a 15-minute phone call. Have a great day. I look forward to speaking to you again tomorrow.